up, guys? I am a long-term investor. I'm a short-term investor. I do it all crypto. And today I'm going to actually tell you why crypto is crucial to any long-term portfolios gains in the long run. So a lot of older investors that do long-term, they really don't understand crypto. They might understand gold, but they don't understand crypto. They might think it just means there's nothing really back behind it. And it's some sort of fake currency. And of course, a lot of the younger investors know about it, but I really would like to encourage to put it in there. So who is Tom Lee? Let's get into Tom Lee. Tom Lee is the bull of the sea. Back a couple years ago, he recommended basically you should have about 2 to 5% of your portfolio in some sort of cryptocurrency, most likely Ethereum or Bitcoin. Well, guess what? Since his prediction, Bitcoin went from 10% to 100,000%, and it's more backed than ever by the government. Basically, what Tom Lee did, Tom Lee and BlackRock did a study, and they figured out that the optimal, right now, it's optimal to have 5 to 10% cryptocurrency in your portfolio of stocks, and 20% if you're young right now. So basically, up to 20% of your portfolio, they said, should be in crypto. And these are the number one financial analyst and the number one private equity corp right now of all their financial analysts tells you to do that. So why does Bitcoin work? So you may be thinking Bitcoin isn't really a real asset or blah, blah, blah. Even if Bitcoin is a real asset, there's better things with more use cases. Well, let me tell you this. Why is gold the number one store of value? Why is gold by far the largest asset in the entire world? Well, you might say it's rare. Maybe it has good use cases. They can use computers and stuff. Maybe because it has such a long history. It was there way before Bitcoin. Well, what if I told you there is something that is more rare than that has better use cases? Platinum, sitting at little 35 right here. Why is platinum worth a ton less than gold if it's rarer, if it's more valuable, if it's stronger, it has more use cases? Well, the reason is because gold is government backed. Basically, government said gold is worth a store of value. And basically what they did back in the day before they had cash, they used it basically to hold money over time. Same thing in cryptocurrency. Similar to Bitcoin and similarities with gold. Gold, there's a fixed amount of gold in there. Well, there's also a fixed amount of Bitcoin. Why is that? The creator of Bitcoin said, we're going to base it off gold and we're going to make only a specific amount of Bitcoin. There's only going to be a specific amount of Bitcoin. Well, how do you get gold? Well, you have to mine gold. We also mine Bitcoin. Well, how do you mine Bitcoin? Through supercomputers, through hard labor. Not everybody can use that. They have super high energy output and super high expensive supercomputers. Just like how gold's hard. You need hard labor to do it over time. And just like that, cryptocurrency like Bitcoin is backed, but it also has better use cases. When you're using transactional purchases, gold obviously isn't easy to use. You can't just carry gold around. Bitcoin, you can hold it in your crypto wallet and you can change it whenever you want. It's a lot of it's decentralized, so the government can't even track some of this crypto stuff. It's kind of like a trustless government. Well, gold, you need to you have to buy a ETF. You have to go in person, exchange gold. You have to wait it. It's a hassle. That's another edge Bitcoin has in there. But you're saying, one, gold is backed by the government. What is the backing with Bitcoin? Well, exactly. The U.S. government is slowly buying more Bitcoin. And especially for Trump government, he's a lot more lenient to cryptocurrencies than anybody else. Like, Trump just passed the Genius Act, which isn't specifically for Bitcoin, but it's allowing for the development of stablecoins, which is cryptocurrency. What is the Genius Act? Well, National Innovation for U.S. Stablecoin Act. He also made 401ks to cryptocurrencies. He's allowing cryptocurrencies in the 401ks. So that's a lot of more mass inflows. That's what we're going to get into later. This is the best presidency for cryptocurrency ever. Nobody's ever passed regulations for cryptocurrency in the favor of just how the Trump office has done. So that is amazing for them. So you say, why is it down right now? It's been on a massive bull run. But like I said, there's other things that's why Bitcoin's better than gold. Like I said, gold has been backed. It's been backed for a long time, and governments over time have said, hey, we need to buy gold as a treasury reserve. Well, Bitcoin is not as old as gold. So let's search up, when is Bitcoin created? When was Bitcoin created? Invented? 2008. Gold was, I guarantee gold is a lot farther back than 2008. What does that mean? It is same thing as gold. It has better use cases. And it's easier to use. So government are saying, hey, it's just basically a store of value. We're going to adopt it over time. If you look at the chart, Bitcoin widely has been outperforming gold. So we see in the past year, 92. And with gold, it has had a heck of a year, but it's only been 30. It's only been 32. And if you look at the max, sometimes it's been stable or down. Well, that's because unlike gold, Bitcoin's actually relatively newer compared to gold's time frame, a lot newer compared to gold's time frame. That means governments are slowly backing gold, like Zimbabwe saying, "Oh, we need to make gold part of our treasury." In the United States, we're going to start buying more Bitcoin. Well, these governments already hold all the gold. Well, now they're transitioning to Bitcoin, which in theory will make the demand go up for Bitcoin go up and the supply to go down, because more and more governments are buying this. Basically, the main use value is a store of value, so it's basically a better version of gold. A lot of investors, one, like gold because it's separated from the stock market. It doesn't move up or down with the stock market. And number two, because it's gold, it's a store of value. Well, basically, Bitcoin is just an enhanced version of gold. The only downside I see for Bitcoin is Bitcoin actually moves more in tune with the stock market than gold does. Gold is basically almost detached from the stock market. Well, Bitcoin can go in the ups and lows in the recessions just like it does, because so many companies deal with Bitcoin now in cryptocurrency. That's how large it's actually becoming. So it goes in more correlation than the market does. But in theory, even if your assets crash at different times, it really should give you the exact same gains over time. But with enhanced gains of Bitcoin, that's how it's. But Bitcoin isn't even the number one cryptocurrency I have. It's Ethereum. Let me get into Ethereum. So let's say you want to hold, I sold you in Bitcoin. Maybe I didn't. So here's Ethereum. You're like, Bitcoin doesn't have any use cases. It's only a store of value, and backing's good, right? But there's really nothing you can do with it besides backing like gold. So, well, if you said that, I would say, well, same thing with gold. You can't really do much with it besides store it away. But anyway, so that's where you get into Ethereum. By the way, let's get into these big ones. The what we call some blue chips: Bitcoin, Ethereum, Solana, and maybe I can put an XRP there. These are going to be your safeties. Anything under this is basically aren't going to be safeties. These are going to be like your large cap. This is going to be like your blue chip stocks, but with cryptocurrencies. These are the ones that are going to outperform all the other smaller coins, which we call altcoins, basically. The only way these are going to outperform, like in this major bull, for example, it's a bull season, which is kind of like alt season in crypto. Basically, what happened is in the bull season of crypto, these will actually outperform. But in the long run, these large ones will outperform because they're large caps, like they're safer. So, what do the other ones do? Well, Ethereum's actually my favorite one. Ethereum. If we look at the price chart, Ethereum was actually at all-time highs all the way over here. And it's actually not. It's basically trying to get its way back up. Why was it back then? It actually used to have correlation with Bitcoin. When Bitcoin moved, Ethereum moved, and people were going crazy about NFTs out here. NFTs, tokenization, everything. But then, of course, once really Ethereum was thought to be slower because it's older than all the newer, smaller tokens. So people are like, all this thing, it's done, right? So it's basically, if you bought it right here, you basically still would have been a negative to this day. Well, the thing is, compared to Bitcoin, Bitcoin has been up like crazy. That's because governments are buying it like crazy. What if I told you this? It's a really great time for Ethereum to run. And really, there really isn't much downside to look at. The only downside I foresee for Ethereum right now is basically if it's an overall session, which could basically push it down just like Bitcoin, because like I said, it is in more correlation with the overall stock market than something like gold would be, basically. So what is Ethereum? Ethereum is what we call smart contracts. I'm going to dumb it down as simple as possible. So basically what happened back here, Bitcoin, Ethereum was basically used for NFTs and all. If you didn't know what those are, basically people bought and sold monkey pictures as a form of asset. Sounds stupid? It's because it is, and that's basically why I went back all the way down. Well, basically, it was at all-time high. So basically, it has not made any significant amount of money for the last 4 to 3 years right here. But right now, we've gotten news of why this thing can run. Especially, like I said, we have the Genius Act. Genius Act in Ethereum. Basically, what Trump did, basically, he signed a law for people to basically allow people to make stablecoins. So like I said 1 Bitcoin, 2 Ethereum, 3 XRP, and 4 Solana is the only ones we should be looking at holding for stock portfolios, since we have easy returns on gains. Basically, only Ethereum, Bitcoin as of right now. So why can't I put Tether? Tether has a larger market cap than Solana, and so does BNB, Binance Coin. Well, Tether is a stablecoin, which is basically, it doesn't move in price. It only stays at $1. That's because it's an exchange of currency. It's basically the US dollar, but digitalized. That's basically what it is. And BNB Binance is basically like a blockchain. Oh, not the blockchain. Basically, they use it for fees and other stuff, but it's basically won't appreciate as well as Solana, XRP, Ethereum, and Bitcoin. So don't really worry about that. So let's get into the Genius Act. Like I said, the Trump office is the most generous office to cryptocurrency of all time. There's never been this much regulatory. There's there's Project Crypto, there's a Genius Act, there's 401ks. Like, I'll get into all that nitty gritty right now, and everything is going to be benefiting Bitcoin and Ethereum, and everything underneath it is going to get benefited drastically. So how do we want to know which one we want to pick? So basically, to put it simply, before I get into the nitty gritty, for Bitcoin. If you think, if you like gold and like a store of value, and you're saying, hey, government backing is ultimately going to prevail, you're going to want Bitcoin. Ethereum, which I'll get into Ethereum secondly, but basically, if you think the retail space is going to expand and people are going to find new ways for payment processing, and eventually everything's going to go digitalized, like 20 years ago, the internet's not at the pace where it was. We couldn't buy everything online like 25 years ago. Well, now we can. And if you think it's going to expand like that, I'm going to be Ethereum. If you like speed and if you think the government's going to take advantage of cross-border payments of other countries to make fast and secure transaction speeds, you'd probably like XRP. And again, if you still like stablecoins and you thought if you thought the internet was going to expand, you would like Ethereum. But if you thought you'd want extra speed, you'd go with Solana. But then Ethereum is basically the government backing version of Solana, basically. So let me get into it. What is the Genius Act? Basically, it allows for companies like Amazon and Walmart to look at stablecoins. Amazon and Walmart research stablecoin. Look into stablecoins. They are trying to look into stablecoins. So what is this? So basically, if you didn't know, the credit card industry is basically dominated by 2, maybe 3 companies. Basically, that's MasterCard, Visa, and American Express. They're dominated there. They have a monopoly over it. I won't get into why it's a monopoly. I do hold Visa and MasterCard for this reason. But basically, nobody else can get in the space. And basically what they do is if you're shopping at Walmart and you use your debit card or your credit card and it's Visa or MasterCard, it's going to charge the business a percentage fee. That's how they make what's part of their money. They don't make money on debt or payments. That's the banks. So how do they make their money? They make their money on very small fees to the businesses when you pay them. Because obviously the consumer doesn't want to pay the fee, so the business does. So basically what stablecoins will be doing is basically we're taking away that fee, basically. So Walmart and Amazon are going to be making their own stablecoins. So basically what it means is if they create its own stablecoins, they would make it in a way where basically you might be able to still use your MasterCard Visa, but you might be able to exchange that first. And when you buy, it might get instantly transferred to stablecoins and then transferred to payment, or maybe you have to buy stablecoins first. And at first, maybe they would offer discounts for people that use it, or eventually they would integrate it better and better over time through new technology. Basically, no fees for the company. Obviously, Walmart and Amazon, over time, these fees will add up. And of course, they have instant payment processing. Credit cards, if you're not using your own money, even debit cards, they don't get the money right away. You have to process it and make sure everything's secure, whatever. Crypto is instantly, and a bunch of small stuff like that, basically, cryptocurrency. So why is this important at all? Well, basically, like I said, Bitcoin, there's a fixed number. Well, Ethereum, there's not a fixed number. A lot of these companies, they don't want to copy Bitcoin. They're not going to be like, we're going to be next gold. We're going to be next gold. No. They want to be different. So what Ethereum does and says, hey, we're not going to have a fixed amount. We can have as much as we want, but the thing is, when anybody, because like I said, Bitcoin is only used mostly to store value and exchange. So basically, there's no reason to actually use Bitcoin for really anything besides government backing. Ethereum, you can actually use it. If you buy Ethereum, you can use it to create stablecoins, basically. And whenever someone uses it for a stablecoin, or if I get into later, tokenization, it will burn Ethereum. What does that mean? Whenever you use it, Ethereum is destroyed. And basically, XRP is in the same way. Whenever you use it for a foreign transaction or whatever you use it XRP for, it will burn. But Ethereum gets burned at a much larger rate than XRP, which makes it great for the situation. So let me get this under wraps. So you're saying that the government is making it way easier for these people to use stablecoins, and basically companies are raving over this because they can basically get almost no transaction fees, instant transaction to make it easier for the consumer and the business to run their business easier. And every time they do this, every single process they make with the stablecoins, every single time they make a new one, it will burn Ethereum, basically telling me it's supply and demand shock. Less Ethereum available and more Ethereum being bought up, basically is what it is. And this is a new, this is a new revelation. This is with the help of Tom Lee, with the help of new technology, and especially the help of Trump to put this out here, that these companies are going to be able to do this at least for the next 3 to 4 years while he is in office, which gives us a nice time frame to hold this long term here. So that's not all. Like I said, Trump allows crypto into 401ks. Why is this huge? Can move unlock billions for crypto, says reserve executive. So why is huge? If you don't know what a 401k is, which you probably have one, even if you don't know what it is, basically it's a retirement investment account. You can't exactly choose exactly what you want, but you can make fun decisions, small decisions on what you hold. So basically what it is obviously crypto isn't in 401ks, but this is for a retirement account. Well, Trump is putting a extreme faith in these large cap cryptocurrencies, basically saying we want with retirement, we want people to retire with crypto in their saving in their 401ks because they think it's going to enable enhanced returns. I think it's going to enable enhanced returns because this is the future, basically. Like I said, betting on crypto, especially on Ethereum, is betting on the internet being bigger in the future, which of course, everything eventually will be on the internet. Maybe 100 years ago, nothing was on the internet, but now we have stuff on the internet. That's just how people evolve, and that's how the internet and technology evolves over time. And eventually stuff will go digital, which is why I'm such an advocate for this. This is not financial advice. This is basically what I'm just giving you, breakdown the news about what's happening. So why is it so important? Right now, the only two, because basically to get in this, you probably need to have a standardized ETF, exchange traded fund. Well, these were saying, how the heck do I even buy this? Maybe I lost you in the first minute of the video because say, hey, Josh, I can't buy crypto in my Roth IRA. Well, actually, you can because Bitcoin and Ethereum, they have past regulated ETFs. Look at all these Bitcoin ETFs. Boom, 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 boom. Look at all these Ethereum ETFs. Boom, 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 boom. But if I look at the extra P ETF, there's probably not going to be as much available. Look, there's really nothing. Solana, there might be a couple. It literally just got delayed because basically these two are the only ones with past ETFs, because basically there's a big debate about securities and commodities, which I won't get into. But basically people have faith in this, and the government obviously does because they passed ETFs, which means one, you can hold this inside your Roth IRA tax free, and two, they'll be the first two cryptos to be allowed in your 401k. What does this mean? One, that means you can probably choose a higher allocation into crypto, and that's number one. And number two, even if people have no idea what crypto is, that means they'll be investing because 401k is automatic. It goes from your bank, it goes from your it goes from your pay, from wherever you got paid, directly into your 401k, directly into invested. So people will directly, unknowingly invest in crypto. Like, do you know how many people have 401ks? This will be, okay, I'm not on the right thing. Absolutely huge when it's a mass inflows of 401k money goes into Bitcoin and Ethereum, which will, in theory, like I said, more demand, less supply over time, like I said. Of course, it won't be burning it because they're not actually using it, but they're still buying it out all the same, which helps us all the same. Like I said, basically, and like I said, stable coins, and there's more uses for, this is the main use, but there's like tokenization. What is tokenization? How do we spell this right? Oh my goodness, tokenization. Sorry, I can't spell. Tokenization is basically where the process for sense data and non-sensitive. Basically what that means is putting stuff like real estate digital. Like, example, to gain real estate right now is really difficult. Like, you either have to, one, buy it straight out, take a loan, or go through some shady website promising you a piece of it. Well, through tokenization, basically what happened is basically Ethereum or a different layer one. With basic layer 1 crypto basically allow you to buy Ethereum based on blockchain. And basically another thing, like I said, the stock market is moving to blockchain. Do you know how many buys and sells and volume there are a day? Stock market to blockchain. This is literally confirmed by literally people inside of the. I don't know exactly what part of the branch of government they are from, but the Twitter accounts don't lie. At least as far as I'm concerned, unless they're taken over. A shift on the horizon. Basically, the stock market is not traded 24/7. At least not stocks. Not yet. Robinhood's experimenting, but stocks aren't traded 24/7. Basically, what a blockchain is, most cryptos, especially Ethereum, have zero downtime. That means they're traded 24/7, and essentially moving all the prices onto Ethereum and using the stocks could be traded 24/7, which would absolutely suck for traders. They're like, oh my goodness, now I gotta trade 24 hours a day, but also increase the demand for Ethereum. And again, all the processes used would directly burn Ethereum, destroying it. Which is honestly awesome. And these things are not just myths. The 401ks is real. Stablecoins they're developing them, and blockchain is moving. The blockchain is really a real confirmed thing that is in the works at this very moment. And of course, like I said, if you look at the price of Ethereum, it is not even at its all-time high, not in the last 5 years, and that is actually insane. There's other ways you can buy Ethereum. Like I said, my way I'm doing it. So let me just show you proof of things. You can't see my password as far as I'm concerned. It just shows dots. Whoop. Try to hack me. No, you don't try to hack me. But basically, I'm buying something called bmnr heavily right now. Don't look at my total 800 loss right now. But basically, what this is, it's basically buying Ethereum. This is another way you can put into your 401k, basically. This is a treasury company. And you have to always be careful of treasury companies because a lot of them are not legit. and they're just trying to pump their stock up. But this one is with Tom Lee, like I said, he's doing amazing. In the future, I really can see this thing going pretty parabolic. Probably average price target, I'm thinking like 100 by the end of the year on the conservative side. As long as we don't enter recession. But if you really want to know more about treasury companies, you can go ahead and search it up on the internet or watch my other video. Of course, this thing's volatile. This thing moves on average 9% a day, which is why I am down about, I would say, a pretty decent amount on this account right now. But I am buying the dips, which is why if you look back at my account, I do hold 50% cash, and exactly 50% cash and 50% market value in this. 50% market value in this, and with my other account. So basically, when this thing keeps dipping, I buy a dip in it. Basically, that's not really important to our talk. So now we have two top dogs. I talked about treasury companies. That's all exposure. You can literally put these in your Roth IRA whenever you want. Now let's get into XRP. What's the main thing of XRP? Well, this is the main thing for cross-border security payments, basically. So there's a lot of talk about when you're actually buying stuff cross-border. There's a lot of transaction, a lot of stuff you need to go through. Basically, in a simple lie, I'm not an XRP expert. This is I'm more of like an Ethereum, Bitcoin guy, honestly, and Solana. But there are a lot of people that advocate for this, and basically the only difference is, in theory, is this thing has gone up parabolically. This thing has absolutely shot up in the last year. So obviously it has less, in my opinion, has less upside than Ethereum does. But if the regulations get passed for this thing specifically, this thing could have extremely high upside, just like Ethereum does. Unfortunately, you don't actually have to hold XRP to use it, and it doesn't really burn as much as Ethereum, which is why I don't like it as much. And it could get hurt by stablecoins because it could probably take its spot as cross-border payments. But the thing is, Ethereum is still holding strong, and I don't see any reason why this thing can't flourish in a bull market. Of course, this is all assuming that we stay in our bull market, because a recession, like I said, cryptocurrency does fall just as fall in correlation with the overall stock market. So this falling due to the recession wouldn't just be a bad judgment on my call. It would just be the stock market falling overall, and basically anything you hold would do bad unless you're shorting the market, which is pretty hard to time. So basically that's the one negative thing I see. That's why I tell you to stay with large caps, because if you do pick something smaller and it doesn't end up working out, then you could lose money in a bull market. That's one terrible, because you missed out on gains and you even lost when everybody else is winning, of course. So, and then you have Solana, which is the faster version of Ethereum. But the thing is, it doesn't have zero downtime. This thing is so lightning fast, low fees, that sometimes it's broken down before, where it's been offline for 24 hours at once at a time. That's why regulators aren't buying it up as much Ethereum. Ethereum is fully, even though it's a tiny bit slower, technology is making it faster over time. Another reason, even though this thing is technically slower, when I mean slower, I mean processing time through payments. And then Solana is really big in the retail space. Well, that's okay, retail. Like when you think of meme coins, everything's bought on Solana with meme coins. Well, Ethereum is going to be where stable coins are processed. Almost all the stable coins are processed, and I think one stable coin's on Solana. I forgot which one it was, but Tether, I'm pretty sure, is on Ethereum. So these two are directly linked, and you see the market cap is absolutely parabolic for Tether right now too. That's why it's the fourth larger, even though it doesn't actually move up or down at all. But like I said, you really want to stay in these top four right here. Bitcoin, what I do is I really like Ethereum right now. But if the stock market does go into recession, these might actually drop a little bit more, since they are a tiny bit more volatile, which then I'll buy up more Bitcoin and Ethereum. Maybe some XRP, and I really like Solana right now. But there are some really bad regulations right now, because they're concerned if it's a security or not. But overall, my consensus is just, if you don't know about crypto, maybe this gave you a better idea. Maybe you consider putting a tiny portion. Of course, 20% I think is a lot for the average person. Even though Tom Lee said it, I think the 5 to 10 is actually a way better, perfect percentage. A lot of people on Blossom, stock market investing app that I post stuff on. A lot of people, okay, make me log in. A lot of people there hold, if I do hold it, some cryptocurrency, it's probably less than 5% at least, and a lot of people actually don't. But it's a really good introduction, especially if you already love gold. You should love Bitcoin, but a lot of people don't love gold because it tends to underperform in the long run. But Bitcoin is basically the supersized version of Bitcoin, not to be confused with the documentary of McDonald's. And then again, if you're already gone into crypto and you're just watching this for the heck of it, there is other stuff. Always, altcoins are basically spin-offs of the main ones. Like, for example, Ethereum, XRP, the alternative, probably XLM, Stellar right here, which is basically the smaller version. Does almost the exact same thing as XRP, just in a smaller version, maybe a little bit faster. Ethereum, you have stuff like Solana, Tron, Cardano, Sui, Avalanche. Those are all layer ones that try to do the gaming, the tokenization, the stable coins, and stuff like that. And there's a bunch of other things. Also Polkadot, but especially these small ones. It's really hard to get into these. If you don't really know what you're doing, definitely stay away from those. Definitely Bitcoin and Ethereum, though. I really like Ethereum right now. That's basically what I came here to say. I was big on Ethereum. I'm buying more bmnr on the dip here. It has a nice little comeback right near the Ethereum balance off resistance. If I'm really making these short-term buys right now, I really want to be focused on not only fundamentals but also these funny crypto cycles. But if you're really holding long-term and you're not holding leveraged like I am, just holding Bitcoin and Ethereum, in the long run, you'll be really solid if you just hold a small position in both of these. So thank you guys for watching. Hopefully you got a good overview of any cryptos. Basically, if you're really wondering, if you're a long-term investor and like, hey, what the heck's going on here? Maybe you're 50 and like, I don't know what it is. But now you got a little general overview, basically, on what exactly Bitcoin is, or what exactly Ethereum or XRP is. Have a nice day, guys.